Hi everyone, Dan Bird here on Tuesday, October the 7th, and this is the midday report. It's about 11:15 a.m. on the East Coast, and we'll take a look at the market. Looks like, could it be possible that we have a red day today? I don't know how to deal with that. We shall see. There's a few things I want to cover. I want to show some liquidity, long-term liquidity charts after I look at what the market's doing, and then we'll go through some of the ticker symbols that I didn't get to yesterday. And then if we have time, I'll do a scan at the end. So let's get started. Let's jump over it. First of all, I'm not a financial advisor, of course. Everyone should know that by now. So this is only for educational purposes. Let's go over to the charts page and let's see what's going on today. For subscribers on the charts page on the left-hand column, you see the 10-minute charts down here that I like to look at now and again. There we go. Big down candle. Started off actually going up a little bit, and then it started to sell off, and now it's actually accelerating to the downside. But it is still higher than the support from Friday. So again, this is healthy, normal pullback. Nothing to be too concerned about. We'll look at the longer term charts in a minute. Money flow is heading down. Technology is heading down. These are all the aggressive sectors. Not looking that great. So the rotation looks like it might be into defensive, staples, utilities, real estate. They're all heading up. And if we look at the cyclicals, they're all fairly flat. Industrials is down, but the rest of them are pretty much flat. So it looks like the rotation is into the defensive sectors. Rotation right here, growth versus value, actually looked pretty good in the morning, but now it's heading down. Discretionary versus staples also heading down. Technology down a little bit. Semiconductors down. Transports down big time today. And here's the breadth. You can see the percentage of stocks above the 20-day, 50-day, and 200-day started to look pretty good as the market was heading higher. Again, this is not too concerning. It's not a normal pullback would be back to the 21. And I've said that before. This could be a buy BTFD moment. Buy the frickin' dip. It's happened every time we come back to the 21. And it looks like we might be headed back there again. And we'll see. We'll see if that acts as support once again. But the breadth indicators here, the pink horizontal line is 0. So percentage of stocks above the 20-day on the S&P is 52%, but the 50-day is 57%, and the 200-day is 66%. So all of them still above 0. So let's take a look at the small and mid caps. Russell 2000, this one looks a little bit worse than the S&P. You can see it started heading lower around noon yesterday and just continued to go down. It looks like it's accelerating now too. So these three down here actually show you whether it would be better to be in the S&P or in the Russell. So this is the Russell versus the S&P, or small and mid caps versus large caps. So right here, if it's heading down, that means the S&P is outperforming. If it's heading up, that means small caps or Russell is outperforming. And you can see it's dropping off a cliff on all of these, small and mid caps. So looks like large caps is the place to be, but the rotation looks to be over to defensive. Here's the mid cap. Now it's below the 21-day. You can see these are the percentage of mid cap stocks above their 20-day, and 20-day is 41%, 50 is right at 50%, and 200 is right at 56%. And if we look at the small caps, same thing, sitting right on the 21 right now, 41% for the 20, 50 is pretty much the same, and 56. And now let's take a look at the NASDAQ 100. Big sell-off, trying to make a recovery right now. But you can see advancers minus decliners. There's fewer advancers, even with this run-up back here. Friday and Monday and yesterday, there were fewer advancers, even though the market was going higher. So that means there's less breadth. And the market's running out of steam, basically. The volume too is dropping off. Same thing. The VIX now is actually spiking higher. It's not above 17 yet, though. I'm going to look at the VIX too here in a second. All right, so that's the NASDAQ, and the breadth for the NASDAQ, 156% on the 20. Now these are, since it's 100 stocks, it's also not only the percentage, but the number of stocks. So percent above the 20-day, 56, 55 above the 50, and 61 above the 200, still healthy, but rolling over slightly, but nothing to be concerned about. Again, here's the 21 right here. That's what we have to watch. If you're waiting to try to get into something, that might be the time to do it. Wait for the 21. That's usually the support area. So that's the NASDAQ 100. Let's go over here and look at the VIX real quick. Here's the VIX sitting right below 17. Kind of going sideways the last few days as the market moves slightly lower. Let me just line this up a little bit. So above 20, bears are in control. Below 17, bulls are in control. And this is the S&P down here. And 10-day moving average put call ratio has been extreme. It's at an extreme. So this is the time when you usually get a reversal. So again, this should be a normal pullback to the 21. If it drops below that, then the 50 is the next level, which is at 6,500 right now. So we'll have to keep an eye on that. The 10-year started to move up, but now moving back down again. The 10-year has been pretty tame, basically, so far. But that's what the VIX looks like right now. Let me show you a couple of other things about liquidity that I mentioned before. So over here in this blue column for subscribers, it's the column in the middle. First, let's look at the Japanese. I talked about this before, and I said I would keep an eye on it. So this is the Japanese 30-year. So Japan, the Bank of Japan, abandoned their yield curve control. For years, they were controlling the yield curve, which means they were artificially keeping rates low. As of last year, they abandoned that strategy, which means they are going to let rates rise. This is the 30-year chart, and this is all time. It goes back to 2007. You can see we are at an all-time high, 3.27. More importantly, look at the acceleration, especially since last year when they abandoned yield curve control. It is heading higher. So this affects the yen carry trade. Japan is the largest holder, as far as countries is concerned, the largest holder of treasuries, US treasuries, bigger than China. The Fed is the biggest, of course, but Japan is the biggest, bigger than China. And what that means is the yen carry trade means they borrow cheaply in Japan, and they use that cheap money to buy assets in other countries. A lot of that is the stock market and other things too, like real estate. But we're just talking about the stock market here. So if they're borrowing cheaply in Japan, they buy US stocks go up. However, as the yield rises in Japan, then it becomes less and less advantageous or attractive for them to do that. At some point, and I don't know where this point will be, at some point, they may decide that it doesn't make sense to take this money and invest it in the US. It might make more sense to invest it in Japan, and they start pulling money out of US assets. And if that happens, then the stock market will most likely go down. Now, that could be 2 years from now. Who knows? Could be next month. We don't know. But that's why I said I would keep an eye on this. And you can see right now, it's continuing to move higher. If we look at a 5-day chart, just this week, look at the big, huge rally just this week in the 30-year in Japan. So this is as of Monday. So it's moving up quite a bit this week. Another way to look at this is with the spread between the 10-year and the Japanese 10-year. This also includes the German 10-year. So here's the dollar. Dollar's moving lower. I'll talk about that in a second. Here's the 10-year, which has been pretty tame. Japanese 10-year. You can see how flat it was back here until they abandoned yield curve control. 10-year, German 10-year, and the US 10-year have been moving along pretty much flat with each other. But the Japanese 10-year, all of these start at 0 from 5 years ago. Japanese 10-year is starting to accelerate. But the key thing is, what is the spread between the two? So if this right now is at 2.5%, if this, and that's where support is from back here in 2022. It also touched it here in 25. If it drops below that support level, and especially if it accelerates below it, then that scenario that I mentioned, that Japanese investors or worldwide investors really might decide it makes more sense to move money out of US markets and move them back to Japan. Now there's another support level down here at about 1.6%. So that's the next level to watch if it breaks through this one. So that's what we'll be watching right now. All right, let's take a look at liquidity. I created a chart and talked about this last month. There is a liquidity chart in here somewhere. Where is my liquidity chart? Right here, liquidity, dollar, oil, and rates. So as you can see, the US dollar has been declining. That's good, even though you're going to hear lots of doom and gloomers saying that the US dollar is dropping faster than it ever has, which is not quite true. It has been dropping quickly, but I'll show you what I mean in a second. But everybody wants the US dollar to be cheaper. The US wants it lower. The rest of the world wants it lower. Everyone wants the US dollar to be cheaper. And the reason for that is 60% of world economies are denominated in US dollars. So if US dollars are cheaper, they can refinance their debt with cheaper rates. That translates to global liquidity. And where does global liquidity tend to migrate to? The stock market or US assets. So a cheaper dollar, a lower dollar is actually good. Oil, lower oil is also good. Lower oil equals global liquidity. If other countries around the world don't have to spend as much on energy to keep their plants running and to keep their homes heated, then they can take that money. It creates more global liquidity, and they can use that money to invest in other assets. Commodities also. Commodities have been creeping up a little bit, but they're been pretty flat. And then the 10-year yield, as long as we continue to see that go down, which it has been pretty much flat right now. So it's been pretty tame, but it's below the moving average line. All of that translates to better global liquidity. And that means that is good for asset prices. Here's the S&P down here. You can see it usually takes about 10 to 12 weeks when it starts to decline for that to actually show up in stocks. So these are things that we need to watch. If the US dollar does start to rise, especially if it does so quickly, if oil starts to rise, then you can figure about 10 weeks roughly the S&P is going to roll over. Right now, that's not happening though. So we still got tailwinds behind us. We might have a healthy pullback, which we'll be watching to the 21. But right now, all of this is very positive for global liquidity. Now, I do have another chart on the US dollar that it's really important for everyone to understand. And let's see where I have it. US dollar 34-year monthly chart. So here's the US dollar. As much as the doom and gloomers like to say the US dollar is dropping like a rock, which it basically is. I mean, it's gone down quite a bit. But as you can see, it's only at the midpoint, going back to 1985. So going back 40 years, the US dollar is right about halfway where it normally should be. So it's basically right where it should be right now. The big question is, will it continue to drop or will it reverse? Now, continuing to go down, again, as I said, is good for global liquidity. So that's what everybody actually would like to see it do. I don't think there's really going to be a concern until it gets down here to this first quartile. These are quarters right here on this chart. So until it gets down here around 84, 85, I don't think there's really a concern for the US dollar. It's actually good. In fact, it's actually good for it to continue to drop. All right. Finally, one more that I just created. which is the ratio between the S&P and oil. And I have that right here, S&P oil ratio, 45 years. So this one is really interesting. This is the ratio between oil and the S&P. If the S&P is moving higher and oil is moving lower, then this will move up. So the ratio is S&P first, oil second. Whenever you have a ratio like this in stock charts, then if it's going up, the first parameter is outperforming. If it's going down, then the second parameter is outperforming. Or another way to say it, the first parameter is underperforming. So through this whole period in the 90s, the S&P was outperforming oil until we got here to 1998. 1998, it reversed and started to underperform. Now it reversed here as well. So you could have looked at that and said, here we go, but it actually went back up. So until it actually broke below this support level right here and continued to go down, it started to be a concern. Didn't start to come back up until the cyclical bull market in 2002. All right, so then it just continued lower, the S&P. Then it came up here, had a big, huge spike for COVID. So there's April of 2020. But here's where we are right now. We're actually higher than the 1998 peak. This one here is an anomaly. But this one here is really important, I think. So what does this mean? Well, it doesn't really mean anything other than it's an interesting data point that we are back to the peak of 1998. Now remember, it took 2 more years for the market to peak. So does that mean from here it's going to take 2 more years, roughly in 2028, somewhere around there, 2028, 2029? Possibly. But again, something just to keep an eye on, just to keep a watch on. So something that I just created so that I can keep an eye on it as well for subscribers. It's on the charts page down here under these oil stocks, S&P oil ratio, 45 years. That's where you can find it. All right, let's go take a look at some stocks that folks have asked about. We can look real quick. Bitcoin's down, Ethereum's down, everything's pretty much down. Commodities, gold is actually up. Oil is down. 10-year is down. Equities, as I just showed you, S&P is down. NASDAQ is down. The sectors, as I mentioned, utilities, staples, the 2 defensive sectors are leading and the 2 aggressive sectors are lagging. So that's rotation into defensive and out of aggressive. Quantum, actually, a lot of stocks look like this, by the way. Here's App 11 making a comeback. A lot of stocks look like this today. SoFi is on here, the top 10 list. It looks like it as well. I actually was looking at this morning, thinking about taking a position, but with the S&P not looking very strong, actually looking weaker, I decided not to, and then I just watched it just give up all of its gains. Right now, it's has created a shooting star candle. We'll see if that persists to the end of the day. A lot of stocks look like this right now, so I would be a little bit careful. I'd actually be waiting for that pullback to the 21. So sometimes it's better just to sit on your hands. By the way, on that topic, this is off a little bit. If you go to the webinars and newsletters page, this is for subscribers, there are lots of training videos on here, technical analysis. I did these a little while ago, master class, a 3-hour class back in 23 I did. But I just added this one, Jesse Livermore, Money is in the Waiting. The Money is in the Waiting. It's a really good video of Jesse Livermore, who was one of the top traders back in the 20s, right leading up to the crash. And he made a lot of money actually in the crash. Yeah, he lost a lot of money too, frankly. I'm going to add some more. There are some other ones out there, but these are on YouTube, so you can probably find them too. But it's an easy way for subscribers. Just come here, watch that one. The Money is in the Waiting. It's really important. Wait for your setups. That's what he says. Don't listen to noise, news, other people, the internet, people screaming that the PE is low and it's going up 10 times. That's all just noise. Wait for your setup. So the money is in the waiting. It's the hardest thing to do, but that's where you make the money, by waiting. All right, now let's go back and take a look at some charts. First one is Meta. Somebody asked me about Meta. Meta continues to go lower. Yesterday, it looked like it had formed a hammer. It's actually higher than yesterday's open, but lower than yesterday's close. So I think the jury is still out on Meta. Meta looks like it's still continuing to go lower. By the way, also for subscribers, the Magnificent Seven is right here in this little button. There's different ways of looking at this, but Meta is, of course, one of these right there. If I just want to see what they're all doing, I use the zoom in feature. The zoom out feature gives you a wider weekly view. There's a monthly view. This is what I use for tracking them each day, and this is actually the zoom in feature. So looking at a zoom in, this is Google. We'll just step through each of them. Google, notice the momentum. Notice where the price is. It's putting in, it could be putting in a lower high right now. So there's Google, there's Amazon. Amazon is definitely lower below all its moving averages. There's Apple, maybe rolling over. Here's Meta, I just mentioned. Here's Microsoft. Microsoft may be putting in a double top, possibly. Here's NVIDIA. NVIDIA also possibly made its top. Tesla. All of these look like they might have made a top, so we'll have to keep an eye on it. Here's Netflix, but Netflix is the only one that's trying to make a comeback, but it's still not looking so great. Broadcom, definitely a lower high on Broadcom, now below its 21. Costco has been an awful looking chart for a while. Palantir had a big red bar right here. Today it has a shooting star candle. You can see it right there. Significant shooting star candle. So be careful with Palantir. Actually, be careful with all of these. Here's Arista Networks, big red candle today. Eli Lilly's, the one bright spot, had a big, huge run. These two candles here hanging in there up near the highs. And Oracle. Oracle is continuing to move down. So I'm going to use this chart as an example because one of the other stocks that somebody asked me about was AMD. So if you remember, let's look at Oracle here. Oracle had that great news related to AI, gapped up, gapped way up, then started to pull back, tried to make a comeback again, and pull back again, and today is now below its 21. It has not quite filled this gap, but that is something to watch out for, especially with these high-profile stocks that gap up like that. Now Now keep that in mind. There's Oracle. Let's look at AMD, which had a huge gap up yesterday. So there's AMD, black candle. Black candle means gap up, sold off all day long, but ended higher than the day before. So the same thing is happening today. Gap up from the close. So here's the close of yesterday. Gapped up. Now it's selling off. So the question was, is it too late to get into AMD? Personally, I won't chase stocks. If you watch that video with Jesse Livermore, that's one of the things that he says. Do not chase. Wait for your setups. The setups will always come. The setup on AMD was right down here when it started to move up above the 21. Right now, you would be chasing, and very dangerous. Just like I showed you with Oracle right here, big gap up. Tried to make a comeback here, but same thing looks like might happen with AMD. So I would just say be careful. All right, Coinbase. Coinbase rolling over, big red candle. A lot of things look like this today. Let's see. KMB, nobody didn't really request this, but just a suggestion that this is a good dividend paying stock, and that the forward yield is 4%, 4.15%, just went up actually. But the chart does not look that great. So there's KMB. Yeah, it could be a good dividend paying stock, but chart continues to go down. By the way, on my website, under the portfolios page, every January, I do a scan of dividend stocks. And these are basically meant to, as a portfolio, just to hold them for a year. So these are dividend aristocrats, dividend champions, and Vanguard high yield. And you can see the returns that they've provided. And these have really good dividends too. So yes, KMB might be a good dividend payer, but look what you had to put up with. So the began the year back here, it's actually basically back to zero, basically back to exactly where it started from, beginning of the year. KMB is not on any of these lists, by the way, did not make the cut. So right here, you can see the chart of all these strategies. Here's aristocrats. So the scan that I do 3 different scans. I do a performance scan for the performance from the previous 12 months. I do a technical ranking, which is the previous 6 months. And then I do a yield, dividend yield. Clearly, the dividend yield has been outperforming, and it's probably the only one that I'll scan for next year. But the Vanguard high yield far and away has outperformed the other ones. You can see right here the outperformance. So I update this at the end of each month, and you can see this is what it looks like so far for this year. And the dividend yield one is up 23%. Right there. So if you're looking for really good dividend stocks, this is a great place to come to find them right here. All right, let's get back to the charts. The next one was Newmont. This is a gold stock, so it should be doing well. Pulling back a little bit today, not much though. It's look at that, just a 45-degree angle. Just continues to move up. This one here, you couldn't even get it on a pullback to the 21. You have to get it on a pullback to the 8, right about here. So if you're looking to get into something like this, just put an order in at the 8 or the 13-day moving average. 13-day right now is at 84.81. It's currently selling for 87. And the 8-day is at about 86. So somewhere between there, probably like 85.50, something like that. Just put an order in and let it pull back. Out of curiosity, see what gold is doing. Gold still zooming higher, gapped up, pulling back a little bit. That's why it's a black candle, but still moving significantly higher. Next one, Rocket. Rocket is just nothing but red candles. It looks like a falling knife. This is one that I covered. It has a huge short squeeze, huge short interest, I should say. So there's lots of shorts. There are actually probably even more shorts now, the way it looks right now. So there's what a falling knife looks like. So I would not be in this. I'd stay away from this. If you were in it, right here is the exit. When it closes below the 21, that would have been the exit up here at around 20. Right now it's at about 16 today. But this one's not ready, I don't think. If it gets down here to the 3x ATR, likely it's going to bounce and have a reversion to the mean back up to the 21. So that might be a point to test the waters on it. But this one actually looks pretty ugly. And AMD I already talked about, so mentioned AMD already. All right, let's go do a couple of quick scans. So this is these are stocks. I'm just going to give you a sense for what the market's doing today. By the way, the one that's up here is MicroStrategy. So big red candle today. I'll look at Bitcoin in a second, but these are stocks that have weekly options. This is the bullish scan. So only 6 of them in here on the bullish scan. Let me actually run it again and see. And now there's only 5. So one of them has dropped out. Coca-Cola, Mondelez, Altria. These are Gilead, which is a healthcare, but the rest of these are all defensive. These are all staples stocks. And then the 20-year looks like it's moving up a little bit. But let's look at the bearish side. So 5 stocks on the bullish side. Let's look at what the bearish side looks like. 45 stocks on the bearish side. I'm certainly not going to look at all these. CLS had been a really big winner. It's moving lower. Carvana, 4 red candles in a row. eBay is on the list. GitLab. This is software group. big red candle today. Lucid, Lemonade, which is a short squeeze candidate. Lululemon heading down, continues to head down. Lyft rolling over. MongoDB, software stock. Basically, this is just in a sideways pattern right now. So you have to watch to see if it takes out the previous lows back here. Here's MicroStrategy that we already looked at. Cloudflare right there. Okta, big red candle. Oracle, showed that before. Big red candle again. Will it close the gap? Certainly looks like it's going to head to the 50-day. Pulte Group for real estate, sitting right on the 50. Peloton, big, huge red candle today. So this looks like a red day today in the market. Not something to be concerned about yet. Here's Toll Brothers, another home builder, big red candle below its 50-day. Vistra Energy also heading down. Walmart's heading down. Actually, Walmart has a hammer, so it might be recovering. Communications services are sitting right on the 21. Energy also on the 21. Discretionary a little bit below, and Zscaler, big huge red candle on Zscaler. So everything right now looks like the market is heading lower. Let's go back and take a look and see what they look like right now. It is currently 1145. So NASDAQ's continuing to go down. There's the Russell, still looking red. And there's the S&P. Trying to make a little bit of a comeback right here in this last 10 minutes. But overall, everything looks like it's still heading lower. So last thing I'll do before I leave is look at the longer term charts, look at the S&P, and we'll look at the Bitcoin in here as well. So again, the 21 is the key. The flip line is down here, sitting right near the 21 day. So that's what we have to watch. This could be a buy the dip, but right now, be patient. Wait to see if it actually gets there. NASDAQ 100, same thing, starting to move lower, 21 days right there. Not a big concern yet. Bitcoin, which has had a huge run last week or so, big red candle today. So that's to be expected. That's profit taking. That's not necessarily something to be concerned about. So far, the volume is tame, but that's not the end of the day yet. But this should be expected. It's went up above its resistance point right here, pulling back right to resistance. It again could come back down here to the 21, which is at 118, and then reverse and go back up. So we'll keep an eye on all of this. All right, that's it for today. Sorry for a long one. Hopefully that was interesting for everyone. Let me know if you have any questions. Please like and subscribe if you would like for me to keep the channel going. And I'll talk to you again tomorrow. Take care.